What's going on, everybody? It's Stas here. So, pretty crazy day in the markets today. We had the S&P and the Dow go up 0.7%. We had the Nasdaq 100 go up 0.5%. And we had the Russell 2000 go down about 0.4% on the day. And today, we're going to be breaking down the markets a bit further, looking at some technicals. And we're also going to talk about a bunch of stocks I'm looking at, many of which just reported earnings today. And we're also going to go over what the heck kind of price action we saw in the markets today and whether or not this is an indication that a sell-off could be on the horizon. So if you guys find value, hit the like button, subscribe, check out all the free resources down below, the Discord chat. You could get 2 stocks from WeBull. Those are valued up to $1,600 and $30 from M1 Finance, $10 from Coinbase. All of those are linked down below. Same with my Patreon. And without further ado, let's get right into the video. So what we see right here is, first and foremost, an all-time high was hit on SPY, right? That was at 420.72, and if we pull up the S&P index, that was officially at 4218.78, and again, that's another all-time high yet again. And going back over here to SPY, let's see what's going on. We can see this massive drop when the markets opened, and we got a V-shaped recovery pretty much into the end of the day, and we ended up closing right by the high of the day, that all-time high, right around $420.72. And that was pretty interesting, right? And I'm looking at this as, yes, we had a lot of companies report earnings yesterday. The big tech names did well. That brought up the market a ton, and I'm looking at this drop as profit taking, right? People started taking some profits off the table, maybe rebalancing a bit. That dropped the markets down about 4 points when we're looking at SPY. That's not that big of a drop, but it's not a small one either. It was about a 1% drop. So that was a pretty decent drop there, right? And like I said, we recovered right into the close of the market, which is very interesting the way that happened. And looking at this 10-day chart, we can see now we're above 418. So as long as we're above 418, SPY is going to be in an uptrend, and that is what I'm going to be watching, right? If we think a sell-off is coming, it's right around the corner, which it very well could be. As these earnings are coming to a close and we digest them, maybe we do get some profit taking or a little bit of selling off. You know, we have to watch and see if SPY ends up breaking under 418, because let me tell you, if 418 breaks, we go down to 416, and then that breaks, then we're going to be in sell-off territory where we could end up seeing an overall pullback, maybe to the lower 400s. I'm talking 405, maybe 407, right around this 180 SMA on the 4-hour chart. I think that'd be a pretty healthy spot for SPY, meaning it could have about 2 to 3% downside from where it is right now. You know, that is what I'm looking at for a healthy pullback, and you know, that would be awesome. But then again, we might not get it. Nobody really knows what is going to happen. We just have to be prepared for all these different scenarios. And if we pull up QQQ, which tracks the Nasdaq 100, you guys can see it also hit an all-time high pre-market at 342.82. We ended up selling at market open pretty aggressively from that point all the way down to 337 roughly. That was a drop of almost 2%, so that dropped even more than the S&P. You know, that was way more volatile, and that makes sense, right? Because the tech names in general, they are more volatile. We can see with the drop to 337, we are holding the uptrend, and by the looks of it, you know, this might want to squeeze back up to 342, 343, retest that point. But if we fail at that point, guys, if we don't break out of 342, we're probably going to end up going right back to 338, maybe even 337 to test that low from today. And if the overall uptrend on this 10-day chart breaks, that is where we could get more selling on QQQ, and a healthy spot we could go to. Look at this 4-hour chart here, guys. I'd argue maybe 328, 330, 332. That'd be a healthy spot, which is about what, you know, 2-3% lower from where we are now. So pretty much I'm looking at SPY and QQQ, if they pull back 2-3%, that is going to be healthy, and that would be, in my humble opinion, a pretty decent dip buy, right? So what do you think? Let me know down below in the comments. As always, if you all are enjoying the video, make sure to hit that like button. Let's do a challenge. Can we get at least 200 likes on this video, 250 likes? Let's see if we can do that. I challenge you guys, and let's talk about some stocks here that I'm looking at and that you guys are probably looking at as well. Stock number one is Amazon, and let me tell you, these big tech names, they never cease to amaze me, guys. This is unbelievable. This stock is up over $130 after market hours. In fact, at one point, it was up almost $200. Once these earnings came out, we closed at $34.70, right? You can see once the earnings came out, it popped to $36.70, $200 pop pretty much. That was a move of over 5%, and Amazon ended up crushing earnings, right? And again, it never ceases to amaze me how these companies, they just crush every quarter, it seems like. EPS came in at $15.79 versus $9.54 estimated, so they crushed EPS, and revenue came in at $108.5 billion versus $104.46 billion estimated, so they beat EPS, beat revenue, and I think the stock's moving a lot higher. And look at this. Before we talk about guidance, I think it's moving higher because of that. Look at what we're seeing right now. We got the big pump, we sold off, and we're holding the uptrend after the sell-off. That's a good sign that the bulls want to hold mid 3500s, 3600 as a new support, and we might even rally from here to test those highs from earlier in the aftermarket session. So Amazon, they did guidance, or they gave guidance for sales, which I think is moving the stock. They see Q2 sales of $110 to $116 billion versus $108.7 billion estimated. So that right there is a pretty nice beat in guidance. So the company is going to do better than what analysts were expecting. That's always great, and I love it, guys. I'm all for this. I mean, I'm in Amazon. This is a stock that I own for the long term. I'm not swing trading this. I mean, you could swing trade it, but for me, it's a buy and hold, and I'm loving this break up to about 4,000. Well, it's obviously not a 4,000, but now that we broke the downtrend here, the consolidation area for the from the past couple of months, now could be the time that we get to 4,000, right? Technically speaking, considering now we're close to 3,700. And yeah, this poses the question, when is that split coming? I think Amazon is going to end up splitting their stock. Ultimately, at some point, they're going to have to do it. I mean, at this rate, the stock's going to be $4,000, $5,000 in a couple years, no doubt in my mind. So they're going to split eventually, and then the stock is probably going to end up going up a lot more. I mean, you guys saw what happened with Tesla. They split, and just when you thought the stock wasn't going to go up more, it went up a ton more after the split. So that could potentially end up happening here with Amazon. So I'm very excited about that. Great earnings there. Shout out to all the people out there watching this video that own Amazon, and let me know, do you own Amazon stock? Drop a comment if you do. And Twitter is one that I don't own, and I'm happy that I don't own it because the stock is not doing well. And if you do own it, I'm not saying it's a bad investment. I'm just saying it's down a lot. Let's be honest. Look at this. The stock closed at $65. Now it's trading at $59 after market hours. It is down 10%, guys. That is no joke. That is not great. I mean, we've seen only a handful of companies this past week drop that much after their earnings. I mean, we saw Spotify get killed. We saw Pinterest not do so well. And now we have Twitter. So a lot of these big, these big tech companies, they're getting hits, some a lot more than others. And then we have some that are just going up a lot, like Google, Amazon, Facebook. Those are crushing it. But we have Twitter, Pinterest, Spotify. These are struggling a bit. And for EPS, they did 8 cents versus 14 cents estimated. So they missed EPS by a wide margin. They did revenue of $1.04 billion versus $1.03 billion estimated. So they beat on revenue, but honestly, it wasn't that much much of a beat. It wasn't too impressive either. Average monetizable DAUs, also known as daily active users, came in at almost 200 million, 199 million to be exact, versus the 166 million from the same quarter last year. So that's pretty good growth there. And they see Q2 sales of 980 million to 108 billion, or 1.08 billion, versus the 1.06 billion estimated. So that could be another reason why the stock's falling. Not only did they miss on EPS, but the Q2 sales guidance is pretty soft. They're looking to do sales under what Wall Street's estimate is, so that is not a good sign. So Twitter's getting hit here, and I'm not dumping the stock or throwing it in the trash, although I don't own it, so I'm not really dumping it. I'm saying I'm not tossing it off my watch list, right? That's kind of what I mean there. Because look, this is a big company regardless, and there's going to be weakening times in different companies, right, where the stock does sell off, and we have to overall see what the trend does. I mean, look, we're selling off aggressively now. We're officially in a bear market, well into a bear market. I mean, Twitter's down almost 30% from its high, but then again, you have to look at the chart and you're like, oh, okay, the uptrend still seems like it's intact overall. I think it's possible that we do see a bit of, dropping volatility, maybe some volatility, consolidation over the next couple of days, maybe a week or two. But overall, I think we could end up holding 50-55, and this could be a dip buy as the dust settles. So Twitter, I like it, although I don't own it. I'm still going to be watching it. I mean, it's not my favorite stock. I wouldn't even put it anywhere near my favorite stock, but as a trade, this could end up being a bounce back. We'll just leave it at that. And we also had Caterpillar today, CAT. They reported they did EPS of $2.87 versus $1.94, so that was a big beat. Revenue came in at $11.9 billion versus $11.09 billion estimated, so a wide beat there on revenue. And the stock initially did do well. We covered this one on Patreon this morning. It ripped up above 230, up to 240, and you guys can see it sold off aggressively for the rest of the day. It went all the way down to about 223. That was a drop of about 5.5%, and it ended up closing at 227. So I'm looking at Caterpillar here as a potential dip buy. Yes, you heard it right. I'm looking at it as a dip buy, maybe off of the 180 moving average support here on the 4-hour chart. And let me redraw this. Take a look at this, guys. We're in a wedge, or it's more, I guess you could argue it's a wedge. Yup. And this point right here, we're a bit oversold, 220, 225 based on this pattern. I think this could end up holding, and we might see high 230s again. I think there could be about 4 to 5% upside from where we are right now. So Caterpillar is very interesting. And moment of truth, did the NIO earnings come out yet? NIO? Nope, they did not come out yet, and those should be out pretty soon here. And I am going to make a video on NIO earnings tomorrow, so watch out for that. Stay tuned for that. And if you all didn't check out my previous NIO video, I'll link it down below. I made that yesterday going over the earnings outlook. Well, at this point, it's probably pointless to watch that video, but if you do want to watch it, hey, I'll link it down below, and I'll make another NIO video for tomorrow, guys. That is a promise. And overall, we're looking at the stock here to break 42. That is the big resistance that we're facing, and overall, we sold off to 39 today. And I have some money set aside. I'm going to let you guys know this right now. I have some money set aside tomorrow if NIO is to dip mid-30s, low 30s. Heck, if it even stays here, I'm probably going to add more to my NIO position tomorrow. I'm being patient. I have some cash, again, set aside in my account for this stock. And yeah, I'm going to add to my position probably tomorrow or maybe even next week. We'll see how it goes down after they report these earnings, right? So we're going to watch this stock. If it holds 40, I think it could go to 42 plus, ultimately fill the gap to 46. But then again, if it breaks this uptrend on the 4-hour, breaks the 50 SMA as well, don't be surprised if we see 35 again, which I would not mind. I would not mind that at all, and I'd probably end up buying even more at 35, right? Fastly is another one that is a sleeper pick right now. A lot of people forgot about Fastly, me included, actually. Somebody in my comments earlier today, left the Fastly comment, and here we are. We're going to talk about it, and it's been a couple of weeks since I looked. Well, I looked at the chart recently, but it's been a couple of weeks since I talked about it here on the channel, and quite honestly, since the last time I talked about this stock, nothing much has changed. It's still in the overall descending triangle pattern here on the 4-hour chart. You guys can see that. We're holding pretty much 58, 60, 62 bucks. That is holding pretty strongly, more like 62. I mean, we got to 58 here one day, so I'm not going to really count that, but we're overall holding 60, 62. That is a good sign, and we're making lower highs into that support. And today, you guys can see the stock went down 4%. That's not that great of a sign for the bulls whatsoever, because that is a sign that the bulls yet again have failed to break out of these moving averages, both the 50 and the 180 SMAs here on the 4-hour chart. So for me, guys, I wouldn't touch Fastly until it's able to break $70 to $75. That's just the truth, because if you're buying right now, let's say, for example, you're running the risk that the descending triangle does play out, and we do end up dumping under 62, and then you might be holding the bag for a little bit. This could end up going $50, $55, and that's probably the worst case scenario at this point. And I do understand the stock's down a lot, so it's really, you could argue the risk reward is solid here, but I'm just pointing out some things that are still that I'm still seeing on the chart. And the truth is, again, we're not breaking out. The bears are still in charge, and there could be more downside. But the second it breaks 70, again, like I said, if we take out this overall resistance here, we end up breaking the high points from the past month at about 70, 75, then it's going to be a completely different story. At that point, I think we could end up reversing to about $80, $77, and maybe even higher than that, $85. Those would be my targets. And yeah, you have to look at it and really ask yourself, because it's all relative. You have to ask yourself, are you willing to buy now and maybe hold through some pain? If so, go ahead and buy. But if you only want to buy on a breakout, well, you got to wait till $70, $75, and that is where we're going to be breaking out. So I'm going to set an alert at 70. Let's put it at 72.50 for Fastly, and this is ticker symbol FSLY. The next one we have here is none other than Starbucks, and this one's holding, as of now, the 180 SMA here on the 4-hour chart. The uptrend is looking like it's intact, and we did see a nice pop today. The stock went up 2%, so that's a good sign that bulls are buying this dip up. And if we pull up this 5-day chart, notice how we're still in a downtrend on the 5-day chart. So that is something we must break before this could be a full-on breakout, because the last thing we want to do is buy Starbucks here at 114, and then this ends up dumping, and all of a sudden it turned into a bull trap, right? That's the last thing we want to do. So I think if Starbucks could break 115, the high from today, then we could get a nice trade from 115 probably to about 118, 120, maybe even 122. So I'm going to wait patiently tomorrow, see if this downtrend breaks. If so, I think this is going to be off to the races, and we could have anywhere from 4 to 5, 6, 7% on the higher end when it comes to upside, right? So watch out for Starbucks, SBUX, and if you own the stock, which I personally do, we are going to be getting a dividend here in about 2 weeks, so that's awesome. I love dividends, although I'm not a dividend investor. I wouldn't categorize myself that at all. I do own companies that pay dividends, and I'm not investing in companies just because they pay a dividend. But if they do pay a dividend, I consider that a cherry on top. So I like Starbucks there, and Pinterest is another one, the last one here, which did do pretty well today considering it's been squashed for the past couple of weeks. I mean, this stock went down from $88 just 2-3 weeks ago, guys, all the way to where it is now. It's down 23%. So today we had a 3% day. About dang time it saw a little bit of upside momentum today, right? And with this hold of above $67, $68, we're holding the uptrend. It looks like it, right? At least on the 4-hour chart. At least to me it does. And I like this hold because, look, if we were to break 64, that was really the low point from this whole year of 2021, really for the whole entire year. Wow, so that's interesting. We haven't gotten under 64. If we were to break 64, though, that would be very ugly. But the fact that the bulls bought up 64, now is trading at 67, 68, that is a very good sign that there's upside momentum, or at least upside potential, to about $70, $72, maybe $75, giving it about 14 to about 15% upside from here on the higher end. So I like Pinterest. I'm going to set on alert probably at about $70. And mind you guys, this company didn't have a grand slam earnings report by any stretch of the imagination, so there could be more volatility in store. So don't just buy this blindly, and don't buy anything blindly based on anybody's opinion here on YouTube or anywhere else for that matter. But with that said, on the flip side, just because they had a bad earnings report doesn't mean that the stock is doomed forever. At some point, the stock is going to rebound, because at the end of the day, Pinterest is a pretty decent company, I'd say. I think it's going to be here to stay for a little bit. So this is going to come back. It just depends on your time horizon, and it really just relies, or rather depends on your patience. So those are the stocks for today, guys. Some thoughts on the market. I hope you all enjoyed it. If you did, make sure to go down below, hit the like button. Let's try to get at least 200, 250 likes. I challenge you guys, and make sure to get into the Discord chat and the Facebook group. Get 2 stocks from WeBull. Those are free, and you can get $30 from M1 Finance, $10 from Coinbase, and you can check out my Patreon for my buy and sell alerts, call outs, morning update videos, and you get more access to me one-on-one throughout the day. That is on Patreon, and all of those are linked right down below. I'll catch you all in the next video. Thanks for watching as always. Stay safe out there. Keep crushing the markets, guys. Peace out.